the fact that Adani Enterprises is exiting Adani Wilmar joint venture, and they've signed an agreement now with Wilmar International. Varun?
Definitely. So Adani Wilmar was actually initially started by Adani Enterprises and Wilmar Group. And if you look at the overall shareholding, the promoters hold 87.87% shareholding. Among this 87.87%, Adani Commodities LLP, they hold around 43.94% holding, and Lens Pte, that is the subsidiary of Wilmar International, they hold around 43.94% holding. So this comes to around 87.87% holding. Now Adani Enterprises initially would offload around 13% stake to comply with the minimum shareholding norms, and after that they would be selling around 31% the stake that is held by Adani Commodities after selling off the 13% stake. So total 44% stake, that is the 43.94% stake, would be sold by them to Wilmar, and the enterprise value that they have come out with is 42,785 crores. So 44% stake comes out to around 18,875 crores, and they would sell the whole 44% stake, initially 13%, then again 31% to Wilmar, and they will totally exit the Adani Wilmar business, and this business would remain with Wilmar, and the name will also the rebranding of the business would be done, and they would come out with a new name going forward. But yes, currently Adani is going to exit the Wilmar business with selling its 44% stake for around 18,800 crores, and this proceeds will be actually utilized for the growth in the infrastructure platform in energy, utility, transport and logistics. That is what Adani Enterprises has said.
Absolutely. In fact, let's take this discussion forward. Joining us right now is Deven Choksey as well to talk about this deal. And Deven, the fact that they've categorically mentioned that the proceeds from this particular stake sale are going to be utilized for the core businesses. And I think that's what the market would like.
Yes, Aisha, good afternoon. I think this is a long pending transaction. If you notice, I think the numbers probably it does make sense that I think they are monetizing this particular asset. Out of totally odd around 42,000 crore kind of a market capitalization of Adani Wilmar, Adani Group stake is somewhere around 18,000 crore in that market cap of 42,000 crore, and balance 18,000 crore is with the Wilmar, leaving aside the public thereafter. So frankly, this 18,000 crore worth of market cap, I think, which they are getting the advantage of, or the value of market cap that they're getting advantage of, that would probably help them in bringing up, I think, their share in Adani Enterprise, because Adani Enterprise currently around 3 lakh crore market cap with around 63% stake held by the Adani Group, about 1,85,000 crore kind of a market cap, out of which I think 18,000 crore could come from straight away from Wilmar. So almost about 10% of the market cap could be fetched by the sale of Wilmar stake. And that money goes towards implementation of projects in airports, in roads, in digital, that is data center, mining and coal. Each of these areas which are being incubated right now in Adani Enterprise, each one of them would probably get the advantage of this money which is coming back, which is around 18,000 crores. So certainly it's a win-win deal. Probably I think much asked for from a long period of time from the Adani Group, and this deal is now materializing. So happy situation, I believe.
And that was clearly felt by Adani Enterprises, the stock, and not just that, some of the other group stocks as well spiked up quite a fair bit. Adani Ports, Adani Power, all those stocks, shot up as soon as the news came. And I guess, that's reflective, Deven. I mean, we're not talking small sums here. It's a sizable $2 billion that we're talking about, and that allocated to turbocharging their core competencies. I mean, energy, utility, transport, logistics. That's something that the market would like.
Yes, absolutely. I think in each of these businesses, I think which you mentioned just now, infrastructure businesses, they have a typical habit. Once you have invested full money, they start generating cash on a regular basis. And that's what I think this group is having the advantage of. Today, you look at the power assets, or you look at the within power assets, the distribution assets, including the renewables. Even I think the assets like roads and the airports, where on a daily basis they generate the cash. I believe that I think this is where probably the strength of the businesses are, that having invested large sum of money into those businesses, now today that business is now generating the regular basis cash flow, which is not the situation with a consumer based business like Wilmar. Adani Wilmar, in which I think you are required to spend significantly large amount of money to build the brand, to expand the reach, and I think you receive the money later on. Here you are receiving the money upfront. So that part of the operational cash flow, which the Adani enterprise gets a benefit out, I think is more advantageous to them vis-a-vis the consumer business, pure consumer business of Adani Wilmar.
Also, Deven, I think one of the bigger points is the kind of debt reduction as well that it brings about, right? I mean, because their overall portfolio, the net debt to EBITDA was at about 2.4x. And now with this deal, you will see a sizable reduction there too.
True, absolutely. I think though it is agreed that net debt to EBITDA is not so expensive at this point of time, or so not, I think, overly stretched at this point of time. But I believe that given the size of projects that the group is implementing, in particular Adani Enterprise is implementing in different areas, I believe that I think this monetization should help. And in my understanding, 2025, 2026, these two calendar years in which they are likely to monetize the other assets, the road assets and the airport assets. They could possibly be going out of the incubation process and probably get into the listed market space like many other Adani Group companies. So, from that perspective, too, I think the independent companies and the reduction at the debt at the group level, these are all getting well from the point of view of looking at, I think, relatively a healthy balance sheet from the perspective of seeing the debt getting reduced and market capitalization advantage coming to their fold in due course of time.
Also, Deven, in terms of perception, right? I mean, this entire liquidity perception that one had with the group, I mean, this is definitely a news in the right direction, I should say, and not just a step in the right direction. Post the DOJ indictment news that we had in November, and then once again, the perception got a little cloudy.
Yeah, in fact, I think if you see the last few transactions, I think in last 3, 4 months, I think in every successive transaction, I think they have basically generated significantly large amount of money. I think they have generated in October about 500 million by way of placing the equity. Uh, Another group companies also ESL also has generated about 1 billion. The cement companies, the Ambuja is also generated about 500 million. So they have been regularly monetizing and regularly bringing the inflow of money into the books. So from that perspective, if you look at it, I think in last 3, 4 months itself, I think they have generated about $4.5 billion worth of money. Along with this money coming in, I believe that I think this is going to reduce the kind of risks that people are talking about on the debt side. So we would remain very comfortable with this particular proposition as I see it, because of the cash flows that has been generated by regularly deleveraging the balance sheet that the group has been doing.
And, alongside they've been strengthening incubation capacity of Adani Enterprises, it sort of also demonstrates their disciplined approach to finance as well.
Yes, I think that is important because on one side, the concerns in the infrastructure businesses that a higher amount of growth demands higher amount of borrowing at the same time. Now, with the kind of advantage that you have because of the higher market capitalization across the group, you are also monetizing systematically this particular market capitalization and generate cash for the group to create the expansion in different areas where they are incubating the projects, like in the areas of roads and airports. They are actually, I think, implementing significantly large amount of projects, and that's where the cash flow is being utilized for. Similarly, I believe that I think in the data center and the renewable segment of business, both these businesses also would be probably asking for higher amount of cash flows going forward. So certainly, I think monetizing the amount by way of selling the stake, I think makes more sense, and that too it generates higher ROE. Like Adani Wilmar, if you see the last year, I think the ROE was just 1%. Whereas Adani Enterprise, with all these incubations that they've been doing, the ROE has been about 9%. So from that perspective too, I think it makes more financial sense for the company and the group as well, that they are putting money where the return on investment is higher comparatively.
So good speaking with you. Thank you for taking the time out and analyzing this new space with us.
Thank you so much.
Okay, that's the big story. Adani Enterprises, they're going to be exiting Adani Wilmar joint venture, and it's a sizable $2 billion that they're going to have on the books, wherein they're going to be focusing on their core competencies and their core businesses, that's sports, infrastructure, etc. We're going to take a very quick break on that note. Come right back. News continues on the other side.
If you like this video, then like, share and subscribe to ET Now.